Hello and welcome to the ActivTrades Weekly Outlook. It's a busy week in economic news this week, with monetary policy meetings forming the main theme. Interest rates have been mostly holding steady across the major world economies, and many investors and borrowers alike are wondering which central bank will be the first to blink and deliver a drop in rates. Some countries are dealing with a resumption of increasing inflation, such as in the US, when in February has just seen a rise in the headline inflation rate from 3.1% to 3.2% due to rising gas and housing costs. Of course, the situation is quite different in Japan, where investors are expecting a first rate hike in April. Let's dive in. China is due to publish a number of key reports on Monday. Industrial production, retail sales, and the unemployment rate are due, among others. China's industrial output increased by 6.8% year-on-year in December 2023, up from 6.6% in the previous month and beyond market expectations. It was the highest increase in industrial production since February 2022. Expectations are for another bump of 4.9% for January to February. Annualized retail sales have been climbing consecutively for over a year now, and the latest forecast has sales up around 5.3% compared to the 7.4% bump from December. Meanwhile, the unemployment rate is still expected to remain steady at 5.1%. Euro area inflation will be confirmed on Monday as well. According to a preliminary assessment, the consumer price inflation rate in the euro area fell to 2.6% year-over-year in February from 2.8% the month before. Despite being the lowest rate in 3 months, it will still sit higher than the 2% benchmark set by the ECB. The Bank of Japan is due to meet on monetary policy this week, with the decision available on Tuesday. As anticipated, the BoJ held the main short-term interest rate at minus 0.1% and the yield on 10-year bonds at about 0% at its January meeting. In the meanwhile, the BoJ reduced its quarterly prognosis for the CPI in the fiscal year 2024 from October's estimates of 2.8% to 2.4%, which reflected the recent drop in oil prices. Analysts expect the status quo to remain this week. The Reserve Bank of Australia is also due to meet on monetary policy this week, with the decision statement to be released on Tuesday and a press conference to follow an hour later. As was largely anticipated, the RBA maintained its cash rates at 4.35% at its first meeting in 2024. The board suggested that while the nation's cost of living was still high, it was because service costs were not declining at a rapid enough rate. Analysts expect that this will remain unchanged at the coming meeting. The ZEW Economic Sentiment Index is due for both Germany and the EU on Tuesday as well. Amidst strong hopes that the ECB will cut rates soon, in February the German index reached its highest level in a year, at plus 19.9 above market estimates of plus 17.5. A further bump to around 21 is expected for March. In February, the EU index reached a new all-time high of 25, up 2.3 points from the previous year. A further improvement up to 28 is expected for the new report for March. Canadian inflation figures and preliminary US building permits are also due on Tuesday. Inflation in the UK remained constant at 4% in January, dipping below the market forecast of 4.2% and remaining around November's 2-year low. Nonetheless, it was still higher than the 2% objective set by the BOE. Like the 2 months before it, January saw no change in the UK's annual core inflation rate, which remained at 5.1%. The newest data is due to be published on Wednesday. The Federal Reserve is due to meet on monetary policy this week, with the decision statement and the press conference on Wednesday. At the previous meeting, the benchmark interest rate remained at 5.5%. Prepared remarks from the Fed Chair Powell for his semi-annual monetary policy report to the Congress indicated that the Fed funds rate is probably at its peak for this tightening cycle, and that it will probably be appropriate to start reducing policy restraint at some point this year, though only when there is a greater confidence that inflation is moving sustainably towards 2%. A further hold is expected this week. Australian employment data is due to be released on Thursday. The country had an increase of just 500 positions in employment in January. Meanwhile, the seasonally adjusted unemployment rate rose from 3.9% in the previous month to 4.1% in January, which was the highest level since January 2022. Expectations are for a jump of 40,000 new jobs and unemployment rate of 4% for February. A range of flash manufacturing, Composite and Services PMIs are due across Thursday for March from countries such as Japan, France, Germany, the EU, the UK and the US. Positive signs are mostly expected across the board, with many of the new results remaining at or climbing above the PAR level of 50, which indicates growth conditions. Other notable events on Thursday include the Swiss National Bank meeting on monetary policy, the Bank of England meeting on monetary policy, and Japanese inflation figures being reported. Following a steep decline of 3.3% in December 2023, the retail sales volume in the UK increased by 3.4% month-over-month in January, well above the market estimates of a 1.5% rise. With the exception of apparel retailers, all subsectors had increases in sales, making it the biggest monthly growth in trade since April 2021. Growth of around 0.3% is expected month-over-month for February, when the report is released on Friday. As businesses were less pessimistic about their prospects for the new few months, the IFO Business Climate Index for Germany increased marginally to 85.5 in February, staying little altered from a 3.5-year low of 85.2 hit in January. The new data due on Friday is expected to show a further slight improvement to around 86 for March. That's all for this week. If you would like to read the full outlook, please visit the analysis section on our website. Happy trading!